I think that if Warren understood Bitcoin is digital property, which is a form of digital capital, if he understood that, he would go, oh, yeah, it's just a dematerialized apartment. My choice is I buy a rental apartment, or I buy 100 acres in Kansas, or I buy a Bitcoin. That's my choice. And can you get, it's, by the way, it's kind of silly to buy all the Bitcoin. The whole point is to buy a small part of the Bitcoin, but it's just as silly as saying, what if I could just own all the land in the world? Well, you don't really want to own all the land in the world because you want other people in the world in the network that are motivated by ownership to trade with you. So I really think that's like the wrong way to think of it. The right way to think of it is, would I rather own $1 million of apartments in New York City, or $1 million of land in Kansas, or $1 million of land in Nigeria, or $1 million of Bitcoin anywhere? And what can you do with property? You can rent it, you can develop it, or you can mortgage it. Can you do that with land? Yes. Can you do that with a building? Probably. Can you do that with Bitcoin? Certainly. You can do it with all three of those. The difference is you can mortgage Bitcoin, you can borrow against Bitcoin from any bank in the world, whereas it's probably hard for you to borrow against land in Central Africa from a bank in New York. They probably won't give you the mortgage.
Hello and welcome to Money Talks. In today's video, Michael Saylor talks about the recent happenings in the Bitcoin space, increasing inflation problems, and the impact of high interest rates on the global economy. Saylor also addresses the statements made by Warren Buffett dissing Bitcoin, and his reply to him will leave you shocked. Make sure to stick around till the end of this video where Michael Saylor updates on Bitcoin's adoption by countries and different institutions of the world. So, without wasting any time, let's dive right into the video.
So why would a company or country want to use Bitcoin? Well, you don't want to use Bitcoin as your medium of exchange. You want to use the dollar. The dollar is really probably the best medium of exchange in the world. All 8 billion people on the planet would probably use the dollar if they were given a choice. The only reason they don't is they can't get their hands on dollars. If you're a working class person in Zambia, Central Africa, or the Central African Republic or something, you can't get dollars. That's why they don't use dollars. But if they could, they would. But let's say you have $1 billion on your treasury as a company or a country. If you store that money in US sovereign debt and you're holding $1 billion of T-bills, and if the US currency is inflating at 18% a year, that means every 4 years you lose half your money.
Recently, a dramatic meltdown in Bitcoin and other cryptocurrency appears to have slowed, with investors left counting their losses after one of the most dramatic plunges in recent times. The whole market is significantly down over the last week. Ethereum, for instance, has been particularly hard hit and lost 24% of its value in the last 7 days. There are signs that the dramatic fall could be turning around, however. Bitcoin is up 14% over the last day and back through the important psychological milestone of $30,000, and the market as a whole is up 13.5%. Fear shock in the market this week after the Terra or Luna cryptocurrency fell by more than 99% overnight, and the wider crash that pushed another stablecoin, Tether, below its dollar peg.
Imagine yourself working as hard as you can in Argentina while the currency is losing 40% of its value a year. What you can see is it's utterly hopeless and impossible no matter how hard you work. You have to work 40% harder per year to stay the same, right? Impossible, right? So the reason that a country or a company would want to switch to a Bitcoin standard from the US dollar standard for your treasury asset is because instead of losing $20 billion a year, they would be accreting or making $20 billion a year because they picked the right asset to store their economic wealth in. You take a country like China. If China's holding $1 trillion worth of US debt and the US inflates the money supply by 20%, the Chinese people pay $200 billion for that privilege. In fact, they're probably holding 3x that much debt. So the US is in essence exporting inflation that costs the Chinese $600 billion a year, every year. Okay. It's a pretty profound idea. Now you could call it security, like maybe the US's greatest export is security. People pay us hundreds of billions of dollars a year for the privilege of using our currency as a reserve asset and using our banking system. But if you're a country and your citizens are working as hard as they can, like maybe I'm basically shipping oil. If I ship $100 billion of oil and I export it every year, but I lose $100 billion by holding the US debt, I'm in essence selling my oil for nothing, impoverishing myself. And so why would you switch? Well, because if I told you everything you do the rest of your life is going to be worth nothing, or you could switch your savings technology and everything you did in the rest of your life would be worth a lot and your children could live a comfortable life, which of the two strategies would you choose? Interest rates are going up because there's macroeconomic headwinds blowing. The real problem is inflation. If inflation's running 20% and the interest rates go to 2%, they're not going to stop the problem of currency collapse. They're just going to create a near-term turbulence. And if you're a trader, you may get caught in that turbulence. But ultimately, if you're an investor and you're concerned about preserving your wealth to give to your children or your grandchildren, then whenever you're in an inflationary environment, your strategy is simple. I have to convert my weak currency into a strong currency. Ideally, convert my weak property into strong property. And that strong property, I want to move out of the country. I want to move it out of the jurisdiction of a politician that may confiscate it or tax it away. Right. And that's why, converting $1 million of pesos into $1 million of dollars in Buenos Aires won't help you, because eventually the politicians will freeze your bank accounts, convert it back into pesos and devalue it 20-1. That won't help. Right. Converting $1 million of pesos into $1 million of dollars and then buying $1 million worth of big tech stocks in the US may be a better idea. If the big tech stocks are monopolies, they'll be able to raise their prices, hold their cash flows, and hold value. Monopolies will be fine.
The overall crypto market has surged by nearly 10% in the last few days following its dramatic crash on Thursday. Bitcoin has surged in price by about 9% in the last 24 hours, inching close to $30,500. The leading cryptocurrency is still down by over 15% compared to its value a week earlier. Ethereum has also grown by about 9% in the last day. Cardano, Dogecoin, Polkadot, and Avalanche have each risen by over 20% in the last 24 hours, as Thursday's crypto market meltdown appears to be slowing down. The crypto market is currently valued at $1.3 trillion, which is still close to half of its value last November.
One of the obvious things is digital property, right? If I created a city in cyberspace with 21 million blocks and nobody could make any more, and it was going to last for 1,000 years, and it was the dominant city and everyone wanted to live there, would you want to own one of those blocks? And I think the answer is yeah. And that city is called Bitcoin. I think what Warren misses is that land is a form of physical capital, right? And housing is a form of physical capital. And people will pay you rent on the farmland so they can farm it, and they'll pay you rent on the housing so they can live in it. Bitcoin is just digital capital, and people will pay you rent to borrow that as well. So if you had $1 million of Bitcoin, you could loan it out to someone and get a yield on it right now. In fact, that's what makes it desirable. If I had $1 million of farmland in Argentina, I could only rent it to a farmer in Argentina. If I had $1 million of apartments in Argentina, I could only rent that to people that wanted to live in Argentina. If I had $1 million of Bitcoin in Argentina, I could loan it to a capitalist in Singapore that would probably pay me 8% yield. And then if someone in London heard about it, they might pay me 9% yield. And occasionally someone might decide they want to pay me 18% yield or 4% yield. And so it's just capital. And if you understand it as tokenized capital or digital capital, then the question is, do I want to convert my $1 million of capital into pure digital energy and loan it to anybody in the world and rent it to anybody in the world on a network? Or do I want to convert it into physical energy like farmland? And then, of course, which country do I want the farmland in, right? And you can't move it, right? And do I want to turn it into an apartment? And the question is, what city do I want the apartment to be in? So, Warren is 92 years old. I don't think Warren has spent 100 hours thinking about Bitcoin. I don't think Charlie Munger at age 98 has spent 100 hours thinking about Bitcoin.
So what are your thoughts about Bitcoin's volatility? Are we in a crypto winter? Tell us in the comments. Also, don't forget to like and subscribe. See you soon with the next video. Thank you so much for watching.